In China in 2024, many people are feeling financially tight, as if their money has vanished. People are beginning to realize that they seem to have become leeks in the economy, constantly being harvested. This all seems to stem from a cycle. Capitalism drives people to consume continuously, linking love with diamonds, marriage with houses, success with vehicles, etc. Through media propaganda, attempting to make people feel that only through purchases can they gain acceptance. However, as people's pockets become emptier, this propaganda also begins to lose its effectiveness. So, Chinese capitalists have turned to a second tactic, selling consumer loans under the guise of enjoying life to people. They not only profit from the sale of products, but also further increase income by charging high interest rates. However, as time goes on, people begin to realize the cost of this borrowing for consumption. The money they once earned through hard work is now being used to repay interest, making life increasingly tight, and money insufficient to spend. The regularity of this economic cycle prompts people to reflect on their consumption behavior. They realize that they may also have been ensnared in this cycle. Let's take a closer look at the real situation of ordinary people across China.
这上半年呢，各个企业的人事啊，估计没忘别的，就是两个字儿：裁人。
In the first half of this year, many companies have resorted to layoffs, seemingly viewing it as their only solution. From ByteDance to Alibaba, and even to JD.com, as well as automobile manufacturers, all have joined the ranks of layoffs. It's as if every company has agreed to cut staff together, isn't it? Think about it, after spending 12 years in arduous study, we finally graduate from university. By the time of graduation, we are already around 22 years old. If we pursue a master's degree, we would be 24 or 25 by the time we graduate. According to today's talent utilization period, by the age of 35, many companies start marginalizing you. Consider when you're 40, you must be prepared at all times to either be laid off or choose to lie flat. Previously, we talked about the three pillars of the Chinese economy being exports, consumption, and investment. But now, the three pillars have become takeout, live streaming, and ride-hailing. People talk about restoring the real economy, but now it's an era of oversupply. Who will foot the bill for the output? Regardless of our current age, we should keep learning continuously, and whether we are employed or unemployed, we should leave ourselves a way out.
真的假的？找工作比照剩下还要难，天哪！
I really don't understand. I'm 29 now, yet I can't find a job. The current situation is incredibly tough. Finding a job feels even harder than finding a partner. Today, I went to a bubble tea shop to inquire about job opportunities, but they directly told me they only hire individuals aged 18 to 25, and criticized my appearance, saying I'm too overweight. They want slim girls. I visited many bubble tea shops, and they all seem to have the same age preference, rejecting anyone over 25, and even more reluctant to consider those who are 30. Some clothing stores are even more unreasonable. Later, I found out that there are hardly any girls buying clothes in malls nowadays, so the staff members have nothing to do. They don't need more people. Finding a job is truly tough. To those who already have jobs, I sincerely advise against quitting lightly. Currently, only some restaurants are hiring, but I'm unsure of their specific requirements. If there are any restaurants or residential areas in need of servers or shop assistants, please let me know. Did you know that when I asked those bubble tea shops today, as soon as they heard I'm 29, they immediately turned me down, saying I'm too old? They also criticized my appearance, saying I'm too overweight. They want someone with a good image and a slim figure. When I asked about the salary, it was only 3,500, which is really tough, folks. Right now, all I can do is consider looking for a job as a delivery person because I only have an associate degree, and I don't know much about other industries. Many malls I visited said they're not hiring. Finding a job is really tough right now.
The once eagerly anticipated Valentine's Day flower buying frenzy has encountered an unusual stagnation this year. Flower shop owners, who had hoped to make a fortune on this romantic day, found themselves at a loss as their procurement costs ate into their profits, leaving them with substantial losses instead. The enthusiasm among most men for gifting flowers to women has noticeably dwindled. Some argue that this is due to the younger generation gradually seeing through the emptiness of consumerism and no longer willing to spend money on superficial vanity items. Others believe it's because the high rate of singlehood in major cities has led people to redirect their flower budget towards pet care expenses. However, the fundamental reason boils down to the fact that many simply don't have the funds anymore. Data from 2024 reveals that China's population in debt has soared to 800 million, with an average debt per capita of 140,000 yuan. Concurrently, the number of people engaged in flexible employment has reached 200 million. While these figures may not resonate with everyone, the increasing number of individuals resorting to borrowing from banks in recent years signifies a shift in the reasons behind borrowing. It's no longer solely for purchasing homes or cars but rather due to business losses or family obligations resulting in online lending burdens. Their income falls far short of their expenses, plunging them into a cycle of financial strain. Particularly worrisome is the growing proportion of young people, especially those with higher education and cognitive abilities, who find themselves in such financial predicaments.
来看下嘛，这是晚上7点钟的街上。
Everyone, please take a look. It's 7 o'clock in the evening, and just look at the street. How many people can you see? Let alone those entering shops. I really don't know how to continue running this business anymore. This store has been open for 4 years, but this year feels like the toughest one yet. Compared to the previous years during the pandemic, foot traffic has sharply decreased, not even reaching half of what it used to be. Running a business now isn't just about the quality of the products, their value for money, or the level of service anymore. While these factors still matter, the biggest challenge now is that there are hardly any people out shopping. I used to think that after the pandemic ends, the economy would recover and business would gradually pick up. However, from last year to this year, the situation has only worsened, especially this year, with a significant decline in performance. It's truly disheartening. I feel extremely lost and helpless right now, unable to see any hope for the future. This feeling of despair is really hard to bear. Perhaps, I have to admit, it might be my own shortcomings in management abilities.
银行最近又要降薪了。
Have you heard that the banks are cutting salaries again? Looking back 20 years ago when I just graduated from university, landing a job at a bank was something so enviable. Bank jobs back then were considered golden, with not only handsome pay and benefits but also high social status. To get into a bank, you either needed top-notch qualifications or influential connections. I've heard of people even spending hundreds of thousands just to secure a position. However, times have changed, and working in a bank now is far from easy. Overtime has become routine, with long hours every day, yet the income is nowhere near what it used to be. There are various reasons behind this, such as the rapid development of internet finance, which has posed significant challenges to traditional banking. But the recent decision to cut salaries and lay off employees in banks is mainly due to the closely related real estate industry. In the past, a major source of profit for banks was loans to real estate companies and individuals for mortgages. However, in recent years, the real estate sector has been sluggish, with fewer loans being sought by both developers and individuals. Meanwhile, people nowadays prefer to deposit money, leading to record high levels of deposits in our country. For banks, deposits are liabilities, while loans are assets. With liabilities increasing and assets decreasing, banks are indeed facing some financial strain. So, the decision to cut salaries and lay off employees in banks has become a necessary move. This once again proves that there are no industries that are always thriving, nor are there occupations that are always stable. The current environment in China is really tough.
Recently, to counteract the ongoing downturn in the real estate market, the Chinese government has introduced 3 major policies. One of these is the establishment of a home purchase fund totaling 300 billion yuan. Although domestic media have highly praised these policies, calling them epic in impact, market analysts point out that at least 5 trillion yuan would be required to effectively absorb the real estate inventory. Meanwhile, key indicators of the Chinese economy are in decline, providing the backdrop for the government's actions. On May 17, the State Council of China held a video conference on real estate policy. During the meeting, the central bank and financial regulatory authorities announced 3 main policies. Vice Premier He Lifeng mentioned addressing the risks of unfinished residential projects, The first policy is to lower the down payment ratio for home purchases, adjusting the minimum down payment for a first home to 15% and the down payment for a second home commercial loan to 25%. This is unprecedented in the nearly 40-year history of China's commercial housing market. Even during the market stimuli of 2008 and 2016, the down payment for a first home remained at 20%. Market reactions suggest that although this policy lowers the entry barrier, it increases the monthly payments and total loan amount for buyers, necessitating consideration of the downward trend in mortgage interest rates. The second policy is to lower mortgage interest rates, including reducing the interest rate on Housing Provident Fund loans and removing the lower limit on commercial mortgage rates. Starting from May 18, 2024, the interest rate on individual Housing Provident Fund loans will be reduced by 0.25 percentage points. The interest rates for loans on first homes of 5 years or less and more than 5 years will be adjusted to 2.35% and 2.85%, respectively, while the rates for second homes will not be lower than 2.775% and 3.325%. Regarding commercial mortgage rates, the central bank usually sets a market benchmark rate, the loan prime rate, LPR, with minor fluctuations. Now that this benchmark rate is abolished, banks can set mortgage rates freely based on market competition. According to official media reports, this policy could reduce mortgage rates by 0.3 to 0.4 percentage points in most cities. For a 1 million yuan loan with a 30-year term on an equal principal and interest repayment basis, the total interest expense could be reduced by about 70,000 yuan. The third policy involves direct government purchases of housing inventory. He Lifeng proposed that in cities with significant housing inventory, the government could purchase some of the commercial housing at reasonable prices for use as affordable housing. Subsequently, the central bank announced the establishment of a 300 billion yuan re-loan for affordable housing, with an interest rate of 1.75% and a term of 1 year, renewable up to 4 times. Deputy Governor of the Central Bank Tao Lin stated that the central bank would issue loans based on 60% of the loan principal, potentially leading to 500 billion yuan in bank loans. Despite the continuous introduction of multiple policies by China to stabilize the real estate market, most measures have not met expectations. The proposal for government purchase of commercial housing as affordable housing has become the focus of this round of policies. However, actual market data and expert analysis show that the government, although intending to revitalize the housing market, faces severe financial constraints. The much publicized epic policies are, in reality, grand in appearance, but limited in effect. Furthermore, lowering down payments and interest rates essentially has little significance. Reducing the down payment from 30% to 15% may lower the initial payment, but it also increases the future interest and principal repayments over the next 20 to 30 years. If a person cannot afford a 30% down payment, a 4,000 yuan monthly mortgage payment would be a significant burden, considering they also need to support children and cover living expenses. Therefore, many believe that reducing the down payment from 30% to 15% will not make housing affordable for those who currently cannot afford it, and it only increases the bank's risk without significantly affecting the housing market transactions. As for lowering interest rates, some have calculated that a 0.3% interest rate reduction will only save about 30,000 yuan in interest on a standard commercial house over 30 years. For a typical commercial house in second and third tier cities, with over 100,000 yuan in interest paid to the bank over 30 years, a reduction of 30,000 yuan in interest is almost negligible. Thus, the policies introduced by China aim to stabilize rather than rescue the housing market in the foreseeable future. Neither housing prices nor sales are expected to improve significantly. What do you think? Feel free to leave a comment below and join the discussion. That's all for this episode. If you liked it, please like and subscribe. We will continue to provide you with accurate reports as always. Thank you again for watching, and see you next time.